everyone? Welcome to episode number 26 of the Traders Podcast. I am your humble, grateful, and appreciative host, Jeremy Hritz. I'm standing up for this episode, and out in my neck of the woods, it's about 94 degrees right now, humid. I'm in my garage studio. I am sweating. I got no AC, no fan in here, but it's going to be a hot episode because today I'm going to talk about what makes a bull market, what makes a bear market, so you can be informed about the characteristics of the type of market that we are in. And currently, we are in a blazing bull market that really kicked off back in October of 2022 when we bottomed out in that bear market. And we've been pushing higher, really on the momentum of artificial intelligence. I posted a video last week about NVIDIA. It had split 10-1, and people loaded into that stock when it did split, drove it up, and it's selling back down a little bit. But it's important for you to know the characteristics of these types of markets, and we are going to get into that today, along with Ask a Trader and along with Mr. ROKU. And I'm going to try to stay cool here in this episode and deliver some quality content to all of you. And without any further hesitation, let's jump into Ask a Trader. All right, Ask a Trader, the hat's off. It's too hot in here. So first question is, Jeremy, how much did you begin trading with? So when I started, I didn't start with lots of cash flow. I actually started trading with the Robinhood app on my phone. And I probably had about $10,000 in my account, okay? And didn't know what I was doing. So I started trading real money right away without knowing how to actually trade. I was taking some courses, so I knew little bits and pieces about it, but I jumped right in. But my starting amount was around $10,000, okay? And then as time progressed and I moved into trading full time, my account was about $50K to begin. Right. And I had to move some things around to get that capital. And then over time, that has grown since and continues to grow as long as I remain profitable. So, and I had an episode about this. You can go and check it on the YouTube channel. You don't need a ton of money to start trading. You don't even need $10,000 like how I started. You can start with any amount. Now, there are some restrictions on the number of day trades that you can take based on how much money is in your account. But you can do swing trades, or you could do, let's say, 3 day trades a week. So there's ways to work around it. But to answer your question, I began with 10,000 and that has grown over time. Okay. Question number 2, Jeremy, what is your obsession with ROKU and why is it the conclusion of every video? And I guess call it nostalgia. When I started trading, ROKU was a stock that I followed quite closely. I traded it a bit, and maybe about 7 months ago, I purchased a ROKU TV and I love it. And, a lot of people call ROKU's products cheap. They don't like them. They don't like their TVs, but I'm the opposite. So I'm a big fan. And also too, it was a stock that used to go on these nice runs and it hasn't. And it's been struggling a little bit. And knowing how the market works, stocks typically always come back. And so I'm waiting for that moment with ROKU to have a big celebration. And it's just a fun thing for me to track and monitor. And so that explains my obsession there. And then the final question, what classes will you be teaching in the fall? So right now I'm teaching the day trading bootcamp, which I have to say, it's the most fun I've had teaching a class since I started doing trading coaching and teaching trading courses. And not to say that the others weren't fun, but this is the first time I've put this together. So built the content out, built the strategies out, and it's just been an absolute blast. Now, a lot of that is because of the students that I have in the class. They're engaged, they're participating. So shout out to all you guys. But coming up this fall, I will have another boot camp that I'll do just for, beginners. And, I'm open to feedback. And in fact, I asked the group last night which classes they would like to see me teach in the fall. And so probably what I'm going to offer is some type of 3-month program where I'm teaching swing trading, day trading, and trading psychology all together. So it's going to be a 3-month plan, probably about 30 sessions. So it's going to be a bigger course than what I'm used to teaching, but I want to just give a comprehensive everything. So this is going to be the everything course. It won't include options because I feel like you need to have a foundation of trading for a period of time before you move into learning options. But this is going to be a 3-month intense class. It's probably going to start, I would say, September, beginning of October, but it's going to cover everything. So I'm looking forward to that. But if you have ideas for what you would like to see me teach come the fall, let me know. Drop it in the comments. Hit me up with an email, couragepaysbetter@gmail.com, and I will be sure to include that in the course catalog for fall 2024. So when I say it's hot, it is hot. It is 92 degrees right now. We've got an excessive heat watch out here. I'm stuttering. I can't even talk. And tomorrow, 95, 94 on Sunday. Man, it is just brutal out there. And I'm sure some of you who live in some of the southern states, you're probably like, man, you're being a wimp. It's so much hotter, or maybe out west. But man, I am sweating and I am hot. But you know what? There is nothing hotter than the bull market that we are in right now. And I wanted to take episode 26 today to talk to you about what is a bull market and what is a bear market. So went through, gathered some statistics for all of you so you can understand the characteristics of these and know how long they typically last, what we can expect in these types of markets. And we'll start with the bull market because it's where we are currently, okay? And with a bull market, it's very simple. We're driving that price higher. We're pushing up, okay? And like I said at the start of the show, this bull market in particular started after the last bear market, which bottomed out in October of 2022. And I mentioned on last week's show how in October 2022, you could have bought NVIDIA at $101 and could have rode that up and made a ton of money, right? So bull markets push higher. We're currently in one. And really what you're looking for, if we're talking percentages, is at least a 20% bump off of those lows from the previous bear market. And these markets are marked by optimism. Everybody's excited, like, wow, look at these things running up. And if you go back to January of this current year that we're in, NVIDIA was running. Super microcomputers, SMCI was having $100, sometimes $200 days. And there was just this excitement, things going crazy. And that's continued here into May, into June, and we're pushing higher, right? In every bull market, there is what are known as corrections where you do pull back, you get a bit of a rest, around 10% of a pullback before it moves into its next leg higher. And the one thing to keep in mind when we talk about bull markets, and some of you have asked this question before, is, well, prices are so high right now. How can the economy be good? Inflation's super high. Know this, that the stock market is not the economy, okay? They don't operate in the same fashion. In some cases they do, but you can have a sluggish economy and still have a bull market. And right now we are seeing that there's still high inflation, but there's great productivity amongst your big, large companies. And your smaller companies, your small cap companies, if you look at the IWM, your Russell Share 2000 index fund, you're seeing that they're dependent on rate cuts. So until those rate cuts happen, you're going to see those stocks fail to keep up with your NVIDIAs, your Metas, your Microsofts, right? But the other thing to keep in mind too is that the market prices in the future. So when we talk about how, the economy isn't great right now, what market makers are doing in their reflection of the prices today is they're forecasting out 6 to 8 months from now. So the prices that you're seeing with stocks today reflect what's happening 6 to 8 months from now. So the market makers are studying, they know the trends, they know what's coming, and they price that into the market. So it's not a current reflection of where we are, okay? And so in terms of statistics related to bull markets, on average, a bull market will last about 3.8 years, almost 4 years, okay? So keep that in mind when we talk about a bear market here in a second. And the average gain in a bull market, if we're talking about the S&P 500, is 114%. Amazing, right? 114%. The longest bull market that we've ever had ran from 1987 to 2000. And that was a 12-year period. And in that time, check this out, the S&P 500 grew by 582%, right? This is how powerful bull markets are. And when they occur, we have to be ready to take advantage of them and capitalize on them. And I talked about last week how difficult it is to call market top. Some people are waiting for that pullback, and the market's just going to keep going without them. But that's where you can identify those areas where you want to get in on a swing trade or a long-term investment. Buy, follow your plan, minimize your risk, and ride it up. Because what eventually will happen, bull market can't last forever. We said about 3.8 years, 4 years. And whenever a bull market's over, we then move into a bear market, right? And a bear market is very simple. It's where stock prices go down, right? And you have pessimism amongst investors and traders, and you see those prices dip. And typically we're looking for a 20% decrease from highs to indicate that we have shifted into bear market territory. Now, the most recent bear market that we had was in 2022. January of 2022 is where it started. And it was because of lingering effects from COVID. All the money that was printed, all the stimulus checks that I know that I got, and I'm sure that you received, right? All that money was pumped and printed and funneled into the economy. So people had a lot of money to spend. And what that did was jacked up inflation. So the Federal Reserve, if you remember back then, the interest rates were zero, but they had to start raising rates. And what happened is they went on the fastest rate increase cycle in the history of the US. And what happened was equities started to drop and we entered a bear market. Okay. Now, typically bear markets are associated with recessions, high unemployment, but they don't always occur together. Remember, the market is not the economy is not the market. In terms of statistics related to bear markets, we're looking at about 9.6 months on average, or about a year, for how long a bear market lasts. That's 289 days. And when you look at stocks on average, they lose about 35% of their value. So it's decently significant. But keep this in mind. Despite a bear market, if you can just stay put and wait it out, eventually that bull market will come in and it's 4 times as long as your bear markets. You can expect a bear market every 3.5 years, right? They're common, they're normal. It's nothing to panic about. And keep this in mind. This was a unique statistic that I found, that even in a bear market, you're still going to have bullish days that happen, right? They'll call it a reversal or a relief bounce. 42% of the S&P 500 strongest days in the last 20 years have occurred during bear markets. So for us traders, right, whatever the edge is, bullish or bearish, if we're in a bear market, we can still capitalize on moves higher. Okay, so just because it's a bull market doesn't mean you can't short. Just because it's a bear market doesn't mean you can take it long. You could do both. Okay, so there you go. There's your bull market. There's your bear market. We're currently in a bull market. Who knows how long it will last? I think we got some legs left here. A correction is going to be coming in soon, so we have to be ready for that. And without further ado, it's time to check out Mr. ROKU. Here we go. There's Mr. ROKU. There he is. All right. So last week, I remember talking about these 2 big bearish engulfing candles that came in, trapping all these bulls over here, driving the price lower. And I had this area marked out, this support that can't break. And this was connected to the lows of last May. And interestingly enough, what happened was we got buying that occurred there. The price got pushed higher. And this occurred yesterday. And today we're seeing a little bit more buying pressure coming in on this once again. Now, that doesn't change anything here with the chart. We are still bearish. We're still below all the moving averages, right? If we just look above us, we see all these lines here. These are the moving averages. And they tell us that if this thing does start to push higher, there's a lot in front of it that it's going to have to get through to make a significant run. If we look at this on a weekly chart, we could see that we are getting a bit of a hammer candle that is shaping up. We'll see how this finishes today. We still have this. It's a Friday when I'm recording this. It's about 1:30. We still have time left. But typically what will happen is if you have a hammer candle like that, and that's not a perfect hammer because that upper wick is a little long. But when you have a hammer candle at the base of a pullback like we have here, that can be a signal that we're going to bounce. And uniquely enough, we are at this support that I have marked as not being something that should break. And if that holds and we could push higher, that could be a good sign for our ROKU bull. So we will keep an eye on this. Little bit of progress here. And remember, earnings for ROKU's coming up July 25th. We've got one more week to go in June. So we'll have to see how this plays out. And again, what did I forget, guys? I guess I'll have to throw them on. I'm probably going to fog these up because it's so hot in here. So let me stop my share. And watch this. They're going to fog up as soon as I put the chart analysis glasses. Look at that. Straight fog. And with that, I think that's a sign we got to wrap up episode number 26. Thank you so much for your support of the Traders Podcast. I appreciate each and every one of you who watch this show weekly. If you have questions, please drop them in the comments. Email me, couragepaysbetter@gmail.com. I'm looking forward to sharing a lot of new minis coming out next week. We will actually be off from the podcast. We're taking a little break, but there's going to be a lot of minis coming, some TradingView tutorials, so make sure you check that out. And let me know how I can help you. That's my goal, is sharing my knowledge of trading with you, my experiences. It has changed my life. I want to share that with all of you. So please let me know how I can help you. And I will see you back here for episode number 27 of the Traders Podcast from Courage Pays Better Than Fear. Have a great, cool day, everyone. Take care.